Good afternoon, and welcome to the Microsoft Middle East and Africa Forum for Sustainability Leaders. In this podcast series, we facilitate knowledge exchange with critical voices tasked with leading the region's drive toward net zero. Today, we're looking at what the climate finance landscape looks like in the Middle East and in Africa, and how climate finance proponents should address skepticism that has emerged around the topic as a means for mitigating climate change. Compared to many parts of the world of financial services, climate finance is relatively new, but definitely burgeoning. As occurs whenever a new sub-industry proliferates, it's now under a microscope by proponents and critics alike, all the more so because its purpose is to help the world confront climate change challenges. I'm happy to welcome today's guests and hear their insights and perspectives. We have with us today Dr. Richard Munang, Deputy Regional Director in the Africa Office of the United Nations Environment Program, Hassan Ghazali, Senior Manager at the UAE Independent Climate Change Accelerators, and of course our host, Yvonne Chebib-Brau, Executive Senior Director at Microsoft. Thank you all for being with us here today, and I'd like to start off by inviting our guests to make some opening statements on this question. And Yvonne, let's kick it off with you. I welcome your thoughts on the theme of today's discussion.
Thank you, Thomas. Thank you for having us and for me to host. It's an honor to host our distinguished guest with us today. Just as we all know, and as you rightly said, the climate change is one of the defining challenges of our time. And addressing it today, it requires significant investments in climate solutions and green energy and technology. So at Microsoft, we believe that sustainable finance has a critical role to play in enabling the transition to low carbon economy and a sustainable future as well. So through the innovative financing mechanism like green bonds, impact investing, carbon pricing, we can unlock the necessary capital to support the development and deployment of sustainable technologies. And as a technology company, we also recognize the role of data and analytics that can play in driving more informed and effective sustainable finance solutions by leveraging advanced technologies like artificial intelligence and other solutions that will help us as well to have and enable us to have better decision-making at scale. As a result as well, Microsoft has been actively involved in several climate finance initiatives in recent years, demonstrating our commitment to addressing climate change through financial mechanisms. Some of the key initiatives that we are doing, carbon fee and carbon pricing. So in 2012, we introduced our internal carbon fee, which charges business units within the company for the carbon emission that they generate. And the fee used is the fees that collected is used to fund as well carbon reduction projects for the purchase of renewable energy. Another example of our commitment is the Climate Innovation Fund. In 2020, we introduced $1 billion Climate Innovation Fund to accelerate the global development of carbon initiatives and reduction and removal technologies, actually. So Today, we have already committed like $471 million to date via our Climate Innovation Fund to accelerate the carbon goals that we put, as well as the water and waste issues. The third element I want to talk about that we have done as well as Microsoft is we invested into renewable energy and carbon offsetting projects. In 2021, we invested in projects successfully, where we removed like 2.5 million tons of CO2 emissions. And we agreed on new power purchase of 5.8 gigawatt of renewable energy that will be in line with our commitment by 2025 to have our data centers all in renewable energies and even our campuses. So this is just as an example of what we agreed on and our commitment at Microsoft. I look forward for the discussion, Thomas, with Dr. Richard and Hassan, and I hand it over back to you.
Great, thank you, Yvonne. And I want to bring in our guests into the discussion as well. And Hassan, I'd like to start off with you and get your opening thoughts on the theme. And I'd like to ask your take on what you think the landscape of climate finance looks like right now. And when it comes to the Middle East and the Africa region in particular, whether you think this landscape is different in any way compared to other regions around the world.
Absolutely. Thank you so much, Thomas. And thank you very much for having me here. The UAE Independent Climate Change Accelerators is a relatively new organization, and we're really working in three specific spaces, domains, I should say. We look at technology, we look at policy, and we look at finance. So we sort of bring all the players together and see what kind of climate action we can take. So in terms of my views on this, it's very clear. The climate genie is out of the bottle. And if you look at this region, particularly, I think the Middle East and the African region is on the front lines. I mean, you can talk about trying to control temperatures aligned to the Paris Agreement, but if you just look at recently, Kuwait already breached it. Temperatures are already high. There is hunger, there is famine in many parts. Now, I can sit in the UAE and things are quite good. It's a windfall for this particular part of the world. But in other parts of this region, things are quite troubling. So the way we see it, well, the climate finance, green finance has taken its journey. Okay, so the first sort of green bond was issued by the European Investment Bank in 2007, followed by the World Bank. And I think what you're seeing now is a diversification. So now you've got green bonds, you've got social bonds, sustainability linked bonds, and there's probably going to be more innovations in this space. So I think, that's a good thing. You do need diversity, not just from an issuer's perspective, but also from an investor's perspective. And I think there's going to be more growth in this area. The market has absolutely exploded over the past year, and we can talk about that a bit more. From where I see it, I think there's going to be more diversification, more deals being made, and they won't be so tightly linked to what's happening in the global marketplace, because I understand the global marketplace is all sitting back waiting for interest rates to rise. And there's a lot of uncertainty with that, and that's fine. We can keep an eye on that. And that is definitely going to sort of impact on investors and issuers. So I see since the past month, you see what happens in January, everyone's got a lot of money and investors make irrational decisions. And as time will progress, you'll see towards sort of the beginning of this year, you might see a marked change in the global markets. But here in the Middle East and at least the African region, I think there's going to be a lot of growth. Won't just be in the debt instruments, but I think there'll be a lot of scope for my favorite sort of flavor of the month, blended finance. And we can talk about some of those initiatives as well. So that's the world as I see it.
Thank you. And Dr. Munang, I wanted to get your perspective on it as well. As Hassan mentioned, there's been an explosion in green bond issuance over the past decade, from around 10 billion in 2013 to an expected 1 trillion in 2022. And this explosion has been accompanied by increased scrutiny on what it means to be sustainable in the first place, and more recently, some negative rhetoric in the press about its efficacy and some questions surrounding its efficacy. And I wanted to ask, what do you think are some of the challenges that climate finance confronts as it evolves as an industry?
Yeah, thank you very much, Thomas. And I think I'll build on what Hassan and Yvonne have said. And before I actually get to your question, I mean, let's acknowledge that Africa, as Hassan have said, and the Middle East are actually at the forefront. And if you take Africa, it's warming twice as fast as the rest of the world. And therefore, they're actually at the forefront of this. But when you put it in perspective within the climate finance landscape, what is happening is that the amount of finance that is needed to match investments to be able to build climate resilience doesn't match up. And therefore, when you look at the latest science, which the United Nations Environment Programme Adaptation Gap Report did produce last year, is that when you look at developing countries, G77, which include the Middle East and African countries, actually need 5 to 10 times investment finance to be able to build adaptive resilience. And starting in 2022, investment of up to 300 billion need to be put in place. But the unfortunate thing is that the discussion on climate finance has been mostly focused on public-driven finance, which is 80%. And what has actually been put into the adaptation climate resilience space is 14% only coming from the private sector. And now back to your question on the green finance. The reality is that when you put Africa, especially in this case, Africa only, when it comes to green bonds, tap 1%. And that 1% that they tap, actually, they pay back higher And the reason for this is, first of all, lack of information, and also the democratization of the space in terms of regulatory frameworks, regulatory policies, and also information that gets done to people. And the other aspect that actually is a very crucial thing to look at is when we talk of climate investment, one of the key aspects is to actually turn climate plans into investment plans, because you will not be able to invest in something in which you cannot see return on investment. And this has been the bottleneck when it comes to climate finance that has not actually been looked to most of the time. And I think as we move forward, I will bring another perspective, which is not only to look at the capital market from the green bonds perspective, but also to look at markets that sometimes are not tapped, which are informal sector markets. And you take the case of Africa, they're worth $300 billion that are not part of the mainstream of climate finance discussion.
Thank you. And Hassan, Dr. Munang mentioned a lot of points there that I think we'll touch upon throughout this session. But just building off of one of those points in particular, the fact that, yes, there's been an explosion in green finance. It's not yet at the level that estimates say is needed to really mitigate these challenges. And on the other hand, within this context, you have the Middle East, which is this year well positioned to help drive the dialogue on climate change, with the UAE hosting COP28 at the end of November. And it's the first time that the region has hosted 2 back-to-back COPs, with Egypt having hosted COP27 at the end of 2022. And I wanted to ask your perspective, what do you think are the hopes and the expectations for COP28 in the climate finance space?
Wow. Okay, so I mean, let me just frame this here, okay? Whenever you have innovations, you can actually look to a very interesting economic theory of innovation that says you're going to have the innovators, you're going to have the early adopters, you're going to get the early majority, then you're going to get the late majority, and then the laggards. It's very clear to me from where I see it. Countries like Saudi Arabia and the UAE are innovators, okay? They're leading the charge. And I think what's going to happen is that within this year, you'll be seeing a lot of issuances. Currently, I understand Mazda is planning its issuance. Details haven't been made clear yet, but it's going to be quite massive. So when you cannot turn to venture capitalists, when you cannot turn to private equity or even banks anymore, it's the only panacea you have is the bond market. So I'm seeing there's going to be more growth in this space, and not just in these economies. Remember, we have to look at Egypt, we have to look at Jordan, and I'm going to see, what I'm seeing is there's going to be a lot of sovereign play here, a lot of supranationals coming in and then working on these initiatives. So I think the landscape is green, but it's going to come with certain challenges, because I don't think COP is going to be a place. I think it's the other way around. Deals will happen, and you'll probably hear about their impact or some of the good things that happen at COP. COP itself is not perhaps going to be the only driver here, because these things are going to happen on their own. It makes good business sense rather than, as I would say, a marketing ploy.
Thank you. And just taking that one step further, because as you said, the COPs provide a platform for involvement at the international level from a lot of different organizations, a lot of different governments from all over the world. But there is this unique moment in time where we have 2 back-to-back COPs specifically in the Middle East. And taking your insights a little bit further, you mentioned Masdar. Do you think that how do you think that the region can leverage this unique point in time where it's hosting 2 back-to-back COPs, and to really help drive the conversation forward as innovators and as early adopters, like you said?
Well, the leverage there is first show and tell. You see how we did it. Structures are in place, and I think the best thing you can really show is this is what good looks like. And I'm talking about regulatory frameworks, governance frameworks. When those are in place, then other sort of parties, the early majority and the late majority, where actually the bulk of the deals you're going to find are going to be sitting there. So you might find other jurisdictions jump up and say, we like how you did it, teach us how you did it, and maybe help us structure deals. So there'll be a lot of sort of coordination between governments to get this out the door.
Understood.
Thomas,
yes.
Sorry, Thomas, if I may as well, when we talk about the becoming more the region of innovative climate financing and to innovative countries in reducing as well carbon emissions, there is one element we need to look at, which is as well the skills of the green labor. So how do we have the green job market that can go with this to be innovative. And this is another, in my opinion, a challenge, because we need this workforce to be able to drive this innovation that you are referring to.
Thank you. And definitely in tandem to the development of climate finance, there's also the workforce that's needed and the general ecosystem of financial services within the that climate finance is a part of. And Dr. Bounan, you touched on this a little bit earlier, and I wanted to ask you a follow-up question about it, because some people, some scholars point to underdeveloped capital markets in the Middle East and in Africa as an impediment for advancing sustainable finance and green debt issuance. And their guidance is that the first step for developing green finance is to first focus on strengthening capital markets as a whole. But others say that no, what's most important is not necessarily the depth of financial markets, of capital markets, but rather the entire ecosystem around which a financial structure for a country is built. And I'm curious to get your thoughts on how you think is the best way to develop green finance. Is it contingent on first strengthening capital markets, or can one proceed without the other?
Both. You need both. This is the point here, and I think Hassan and Yvonne have touched on this, and I think this is very, very critical. The reality is, first of all, finance for what? Finance for transformational development and to build resilience. And who build this is people. So you need skills. But at the same time, you also need finance that is accessible to the bulk of the communities and of the population. And in this case, if you take Africa, for example, if you take the entire developing world, 77% of young people between the ages of 15 to 24 actually are informal. So it means most of them don't even have access to banking system and even to capital markets. That's one part. The second part is, even if you are to develop the capital markets, are they going to be able to provide the financial assets to these communities that are actually more vulnerable to the changing climate? And the third aspect, therefore, is we need to develop all. And first of all, to start with reskilling of youth, especially in these communities, so that at least they can be viable to assess finance in a way that they can then tap into the innovations, technological innovations, and market shifts of products that are not only building climate resilience, but can actually be able to tap into the opportunities that climate change presents. The second aspect is blended finance. I think Hassan mentioned this, and I think this is a very big arena that the world is shifting to. And if climate finance is to make meaningful change to people's lives and also to business, blended finance needs to become the central topic of COP28. And here, what do we need? We need governments to provide seed funding to be able to incentivize private sector actors, banks and microfinance, to be able to lend to innovators, to actors that are actually taking climate action and transforming and driving transformational development. The second aspect is that we can not only stay with banks or microfinance, we need then to assess those structures that are accessible to the bulk of the population in the developing world, which are the informal sector. And in the African continent, we're talking over 80% of people in the informal sector, and they have structures that are called cooperatives. Even in the Arab world, there is the riba, which is a financial structure. In Africa, we have the Jangis and the Tongtings. In East Africa, they call them chamas. How do we ensure that a de-risking facility developed by government can actually be leveraged to make sure that microfinance and these lower level financing institutions provide financing to those who need it most, so that at least they can drive innovative and enterprising solutions? I think this debate, until it reaches this stage, then definitely we'll be missing out the bulk of the population. And then even when the technological and market shifts actually take center stage, we only have fewer people there.
Thank you. And Hassan, it was an interesting point that was mentioned a few minutes ago, this priority of financial inclusion and on targeting the unbanked before climate finance enters the picture. And when it comes to sustainability is a very broad umbrella with a lot of competing priorities. It's not just climate finance. There's a focus on innovation, on scaling solutions, on gaining international consensus, on international forums like COPs. And with so many competing priorities, how do you think that COP can best approach and prioritize climate finance within this, what appears to be sometimes a never-ending list for confronting climate change?
Okay, that's a good question. But if I could just take it one step back to your previous one, just to react to that, I absolutely believe strengthening of the capital markets, improving governance is critical. That's got to start first. If you look at the ESG landscape, it's littered with the zombified corpses of companies that did not take their governance seriously. The same thing applies at the household level. If I take debt and I'm, not a good spender or a bad spender, it's going to reflect. So I do believe that you need to get your house in order. Transparency is its own reward. The moment you can develop those principles or those processes, investors flock to it. Now, as far as the informal sector goes, I think there's great scope, because that's how you get scale. I mean, I come from a country like Pakistan where a lot of our economy is still informal. Funds flow informally. So you do need to bring them into the loop. Now, as far as what COP can do in this regard, I think COP will be a great place where people will be looking forward to make announcements. People talk about showcasing more than anything else. It's an event. You get dressed for it, you come there and you make a nice speech and you tell people what you did. I think in the run up to that, it's really providing the impetus. But at a governmental level, it's one thing. Okay, for governments to come and say we did this, but governments have already issued their NDCs. There's very little underneath that. I think what you'll be seeing at COP is a lot of policy nudges made upon the private sector, and then you'll see the private sector stepping up and saying, well, we did this and this and this, and this reduced XYZ emissions or led to this much green finance, and all this talk of loss and damage and the negotiations that happened there, and I hope there are some successes in the negotiations there. That's probably going to be like about 25% of sort of the hoo-ha at the event. And it's going to be more about, well, what the private sector actually delivered in that time frame. So I'm very excited for those policy nudges to come out, which requires regulation, which requires good governance. So I'm firmly in that camp.
Thank you. And building off of that a little bit further, Dr. Munang, it was mentioned that, yes, COP is this forum where it's all about cooperation and it's all about partnerships, right? And this recurring theme of partnerships that we're starting to hear. And sometimes organizations enter into joint ventures or other forms of corporate partnerships to provide financing that they otherwise wouldn't proceed with. In other areas of sustainability, we've seen, like was mentioned before, public-private partnerships where government agencies work hand in hand with the private sector organizations toward these shared objectives. And what role do you think partnerships can play for advancing climate finance in the Middle East and specifically in Africa, not just during COP and when there's a mega event like COP, but even without these mega events that put the spotlight on these partnerships?
Yeah, public-private partnerships are actually what I call the turbocharger for transformational climate action and even for climate finance itself, because government alone cannot do it. The private sector alone cannot do it. So you need that symbiosis of government coming together, where government put the regulatory frameworks, they put incentives in place, not only to incentivize private sector, but even incentivize individual citizens to be able to invest in their own capacity, like green bonds, where they can be able to buy, to invest into it. But the big point is the shift of transformational development under the changing climate today is one in which all governments across the entire world, and most in the African continent and the Middle East, have to follow. Because that's the only way you can be able to drive sustainable economies and, of course, match up to gain and benefits from the solutions that are coming up. But it is not government that innovates, it's the private sector. And therefore, government working with the private sector and putting in place the right regulatory reforms and incentives. And focusing back on what I said, I think the limited resources that government might have should be used in developing de-risking tools, because blended finance becomes part and parcel and a central part of public-private partnerships where government de-risk investments to then be able to drive transformational development. I'll really bring a practical example. We're talking about e-mobility today. That's a whole technological shift. And then a market shift, because that is where the world is moving into to drive that low emission development pathway. And this is a market that is worth over 200 billion as of 2022 from the statistics that we have. And that then means that government putting enabling incentives, enabling policies for that to pick up, and at the same time also providing finance to enable investors to be able to invest and de-risk these investments, will see not only transformational development, but more opportunity. It therefore means that public-private partnership is a must for climate finance to be effective, optimal, and efficient.
Thank you. And that's a very interesting point that you raised there, this relationship, this in a lot of ways unique relationship that the government often has with the financial sector. I wanted to follow up, ask you another question as a follow-up to that, because from the policy perspective, the financial sector is one that's traditionally heavily regulated by the government for various reasons, for protecting consumers, for avoiding contagion that can create a recession. And I'm curious to know your thoughts on, in addition to these de-risking tools that you've mentioned, if there are any other policies that come to mind that you think best support climate finance and allow it to grow while helping it avoid the same pitfalls that traditional finance has sometimes fallen into?
I think governments, especially when the Paris Agreement in December 2015 and the development of the nationally determined contributions, the NDCs, that countries, and especially in the African continent, where as we speak today, 52 countries have put in place the NDCs and 48 have actually of the ambition. What we are seeing is that in these NDCs and the different climate acts that have been passed in parliament, there are incentives, and countries are even moving forward to remove taxes on, for example, clean energy. There are a lot of countries that have removed not only taxes on clean energy, but they're actually giving incentives to investors in these areas. There is Cameroon, there is Kenya here, where they've done that. But the point is that the removal of taxes or giving tax rebates to investors that are putting money into these clean energy solutions need to be moved a step further, not only to target heavy investors, but also to go down to the local level to also target young people, because you're talking about a continent with over 60% that are young people who then need to be incentivized to then be able to start taking climate action as a business opportunity, as an investment opportunity, and they need tax rebates. But this is something that is not done, and therefore looking at the regulatory reforms and the incentives that need to be put in place need to go beyond just taxes, but also look at a very different dimension that I think need to be put in the vision of national and regional development, which is to start integrating climate finance and climate entrepreneurship in the entire school curriculum, so that we then make it part of and parcel of knowledge, of opportunities that will then be tapped by each and everyone. And this is something that is not actually there. And the last aspect, which I think is the soft part, the skills retooling again, whereby there needs to be a lot of investment by governments in training young people, in investing in businesses that are viable, and also making sure that at least those businesses that are helping also train other people can be given rebates, can also be given the incentives that can make them flourish. I think this dimension could be quite very helpful.
Thank you. And Hassan, Dr. Munang touched on some points there that are in some ways specific to Africa, a relatively young population compared to other regions around the world. Yes. And were you thinking of that like me? And I mentioned that because this podcast series covers the region of Middle East and Africa, which already is a very large region with a lot of different markets. And within that region, within those two regions, different governments take different approaches to sustainability and to climate finance. And even adjacent countries, for example, the UAE and Saudi Arabia may have different approaches. And for example, the Saudi Public Investment Fund, for example, issued 2 rounds of green bonds in the past 6 months, raising billions of dollars in the process. And it underscores how it's increasingly prioritized for that market. You also mentioned Masdar briefly earlier in the podcast. And I wanted to touch on that point and try and take it a step further and ask, given so many strategies happening concurrently within this region, if you've seen any strategy or any approach that you think is most promising so far.
Okay, so I think everyone's favorite player right now are pension funds. If you look at the U.S. market, look anywhere else, and it's linked to this aging population, which is quite interesting. This is a very interesting connection. You'll find pension funds where there are aging populations aren't interested in the long haul because they've got to clear out. Particularly in Japan, this is an issue, which is why perhaps there's more of a focus there on transition bonds, just a sliver of activity there. I think the younger the population, the more appetite pension funds are going to have to invest and go the long haul. Long-termism needs to be brought into this marketplace. Currently, you have companies that make annual plans. annual budgeting plans, that's not going to work anymore. Governments are working on maximum 3-year plans. That's got to change. And I think that push can come from two entities or two groups of entities where I think the hammer is going to fall on them. One are the pension funds, the other are insurance companies, and both rely on sort of the youth or young populations to a large extent. So I think one should look there to see, well, there's going to be a lot of investment coming from there, and then court them as the case may be.
That's very interesting. And Dr. Munang, I'm curious to get your take on that as well, because this balance between short-term versus long-term, because some financing mechanisms are structured in such a way as to emphasize short-term benefits and returns, and joint venture and different, other kinds of specific project financing come to mind. On the other hand, other financing mechanisms take a more long-term approach, such as issuing bonds with a faraway maturity date. And I'm curious your thoughts on whether you think there's room for both in climate change. Should one be prioritized over the others? Should climate finance emphasize the creation of long-term benefits rather than just addressing immediate needs?
Actually, both, because the reality is that people need to see that they can have a return on investment in the immediate moment, and then also in the long term. And I think if that is structured in the short, medium, and long term, we will have different investors scrambling in different spaces, either the short, the medium, and the long term. And I think that then brings in that dimension of Hassan bringing on this dimension of insurance and actually pension funds. And if you look at pension funds, I mean, that's the easiest entry point to tap to invest for the big investments that are actually needed and these huge sums of money that we mentioned here today. But I think what needs to be done is when you look at the different populations like today that are already suffering, there's drought in the Horn of Africa that have affected over 22 million people today as we speak. If the communities that are facing this drought were to access immediate finance, how would they get that? And even if governments were actually to provide stimulus, as we saw during COVID, which structures will they use to channel those? And that goes back to the point that I mentioned earlier, which is leveraging accessible structures to communities that do need this, but not only as a social finance, because one of the problems is that when you talk investment finance or climate finance in this case, it cannot just be seen through the social lens. And I think that has been part of the problem, especially in the developing world. It's not seen as investment finance, but it should become investment finance that even if the stimulus are given and de-risking tools are developed, we should use it in such a way that actually the communities leveraging this should use the money to invest in actions that can bring return on investment in enterprising activities. And that is one thing to do, which then brings me to the point of a change of a narrative. The narrative on climate finance has mostly been about social. It's been about, yes, helping to cope with the impacts of climate change. Now we need to move to investment finance, and that's why we only have 14% of the private sector as compared to 80% public-driven financing that mostly is going to be the talk in COP, which I believe that the narrative can change. And therefore, to answer you, we need short, medium, long-term, but more so making sure that the needs of every community, which is different, because there are different investors. There are investors that are going to go at mega scale. There are also investors in local communities that may need accessible finance, not a lot of money, but then to build a simple solar dryer that a mother can use to dry her vegetable, or to get a solar power irrigation to irrigate her small piece of land in communities. And so I think that kind of thinking and logical approach that takes into consideration short, medium, and long term will be quite very, very helpful to engage the entire populace.
Understood. Thank you. And as we approach the end of this podcast, we're rounding up on our half hour here. I welcome each of the speakers to make some closing remarks on the topic. And the final question I wanted to ask, and feel free to answer this question and frame your closing remarks around it, is looking ahead through the rest of this year, specifically in 2023, with this evolving narrative that's been mentioned a few times. Do you think that there are any trends, or have you seen any trends so far that you think that we should be paying attention to when it comes to the development of climate finance? And Hassan, why don't we start with you, please?
Okay. I mean, I have some very clear views on something you touched upon earlier, and your question was more about the rhetoric and the criticism. You're talking about sustainability-linked bonds. There's been a lot of criticism. They've drawn a lot of ire thanks to the world's largest protein manufacturer down in Brazil. There's been a lot of scrutiny, as it should be. So firstly, to round off, I'd say, well, what message should climate proponents offer its skeptics? We say, thank you. Offer them an espresso and a donut. This is exactly what we need, but come not with loud voices, come with constructive criticism and scrutiny. So firstly, on these SLBs, I think that's something you need to look out for. The region is going to grow further. This part of the market is going to grow. Remember, wherever someone's more consumer focused and you want to get funds in for general corporate purposes, that also reduces your emissions intensity. It's sometimes more viable if that rather than a green bond where you're looking at particular projects. So I think SLBs, while they get the criticism, but now ICMA's issued some guidance and recommendations. So I think that's all going to fall into place. So this part of the market, this instrument, I think you'll be seeing more of down the road. So I'm very excited for this. And again, like skeptics, please keep coming at us. Please offer more scrutiny, but make it constructive and enjoy the donut.
Thank you. Definitely constructive criticism is needed. And Dr. Munang, we'll go to you next for your closing comments.
I think one of the best opportunities that have ever existed since humankind was created is now. And why do I say now? Every opportunity to bring high returns on investment are with climate action, and therefore leveraging resources to invest in climate action solutions, especially clean technologies, will bring huge investments, huge returns on investment. And more importantly, what needs to be understood, especially when it comes to climate finance, is that governments needs to understand that people will only put their money where they see returns on investment. And so all their NDCs, the nationally determined contribution, should be turned into investment plans. And they should leverage the little resources they have to put in place blended financing. But as they do so, the young people should actually be at the center stage, because they are not just the future, but they are the present ingenuity actors that can move the needle forward.
Thank you. Definitely return on investment, also a priority. Money makes the world go round. And with that, Yvonne, we'll leave it to you to give the final closing remarks.
Thank you, Thomas. In conclusion, sustainable finance is a critical enabler for the transition to a low carbon economy. I want to thank Richard and Hassan for the discussion. I think few common themes that came as well from the discussion. One is the need for diversity from investors' perspective and blended finance. Balancing short-term and long-term investment for the ROI. The other element that as well struck my mind is how we need to develop the entire ecosystem. Back to what Hassan was mentioning, it's not only at one angle, how when I look at the entire ecosystem, and the need as well to look at the skilling the youth to be able to assess the finance and for the innovations. The other element I think is, and what we are looking for COP28 as well as the policies to have incentivized the private sector and to incentivize more microfinance, so to take climate action as well, where it should be as well in the developing countries where there is a big need there. Few numbers, actually, I am shocked as well. I still look at it, the number that Richard mentioned, around 14%. Of investment are coming only from the private sector. I think there is a big role. We need to work collaboratively, governments, businesses, individuals around the world. And honestly, we believe we can create more sustainable future for all by this collaboration. Just to close, at Microsoft, we are committed to being carbon negative, water positive, zero waste, and protecting more land than we use by 2030. We are committed to playing an active role in this transition as well through innovative financial solutions. And we hope our efforts and investment will inspire others to take action towards a more resilient and sustainable world. Thank you, Thomas, for having us. Thank you, Hassan, and thank you, Richard. A pleasure having this discussion together.
Thank you all.
Thank you, Yvonne, and thank you to all of our guests for joining us today. As we end the podcast, I'd like to thank the three of you for being on this edition of the Microsoft Middle East and Africa Forum for Sustainability Leaders. Dr. Richard Munang, Hassan Ghazali, and our host, Yvonne Shebib Brau, thank you very much for joining us today, and please join us again in the future.
For sure. Thank you. God bless.